Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 6th. My name is Eric Wilkinson. Get out there and vote. Anyway, let me go over a couple of things real quick. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data we got today in the form of PMI. Now remember, across the pond, PMI numbers, they look for the flash estimates. That's already been out and disseminated. So we did get some final services, PMI and stuff like that out of Europe, the European region, and basically everybody beat and were above 50, which is expansion. The only one that was a pullback and was expected to be expansion that didn't beat the number was the Italian services PMI. Came in at 49.2, expected to be 52.1. Like I said, the broader rest of the market beat the numbers and were above 50, showing expansion. And then today also being the election day, it could be a little wanky in the markets. And for the most part, that's about it for the economic data. Not a whole lot to go on, I know, with today. It's going to kind of be just market driven. Tomorrow we get some good economic data in the form of crude oil inventories and some other retail sales number coming out of Europe. So keep your eyes out for that for tomorrow. As of right now, we're just kind of going on what we have, which isn't a whole lot. That being said, we've got crude oil moving off by about better than $1.50 right now, touching that value area low. Now, I mentioned this yesterday. I thought we might go down there and test that. I think it's a little overdone to the downside at this point. I think we are due for a bounce. Despite the fact that even if we get a build in the crude oil, I think we might see a bounce tomorrow in this market. And I put on a trade that I'll talk about here in a little bit based on that assumption. And we've got gold futures. They're off a little bit, but at that point of control. And, you know, right there, there's just not a whole lot of directionality for gold, especially at this point on the charts. And we really, to get gold moving, need some other ancillary things happening, like the equities really moving. And as we talked about yesterday in the daily market commentary, we've had several inside days. Today finally being one that we've broken out of that inside day, but we've been stuck in this small area that's just been kind of sideways, despite the fact that we've had some big moves. And we'll look at that on the charts here in a minute. But gold really needs something to get it moving, and there's nothing out there happening right now to make that happen. Now, bonds are off just a little bit with the equities rising, but again, I don't believe that the bonds have a whole lot of room to the downside. The economic data we've been getting is good. It's expansion, but it's not robust, and I've been saying that like a blue in the face, and I think the Fed needs to pause. They are expected to pause at the next meeting, but having said that, I think that they need to let all of these interest rate hikes meld a little bit to see where we currently are, because until we have that, we have a guessing game, really. All right, the VIX. VIX is moving higher despite the fact that we're seeing equities move higher. It's in the 20s, hopefully to stay. But this is what I'm talking about. The Dow Jones up 100. Usually we see the VIX starting to come out. Obviously, people are still nervous about downside risk here, and that's what's driving the VIX higher. Even though we're moving higher today, people are buying puts and protection. That's what's causing the VIX to rally. So people aren't sold on this upward movement today. With the NASDAQ being up 33 points right at the point of control, I talked about this. This, I think, is where we are going to settle down, at least for a week or so. E-mini S&Ps is pushing up against that 38 Fibonacci extension here. That being said, it's so close to the point of control. I've talked about this before. It may not really act as support and resistance like we would see at some of these other extreme levels. So That being so close to the point of control, it could just be a number that we're trading around, really, rather than a support and resistance. And then E-mini S&Ps, we could tell last several days we talked about this, very inside days. Today we're getting a little bit of breakout from that, which is good to see. That being said, it's not much of a move to make any foreseeable predictions as to the directionality of this market as far as I can see. But with that being said, I talked about crude oil being overextended to the downside. USO is the oil fund ETF. It is at 100% IV, right? That we looked at the chart on the crude oil inventory, and crude oil numbers, and we could see that the volatility was actually rapidly coming out of this at these levels. So with the volatility coming out of crude oil, I would expect that to start coming out of USO. That's also part of my thought process in creating this trade with USO. So I think USO is overdone to the downside, along with crude oil. I also believe with the volatility being really high in USO and not over there in the futures, that volatility should be coming out of here. So I decided to go in there and sell some puts. And I did the December 12.5 puts in there for 34 cents. So I'm looking for a bit of a change in directionality. I've got the value area low down here to act as support. So I'm looking for that because I'm just slightly above that, but with the credit I'm receiving, that puts my break even down closer to 12.16. So that is below that value area low. That gives me a little bit of wiggle room for this trade as well. So playing this volatility, I'm selling vol in this trade. I'm collecting the credit because of that high volatility, and I have a support area that I'm looking for us to slow down if the market continues to slide. So USO looking for a bounce there. eBay, if you guys remember with eBay, I'm long eBay at 36. I've added enough credits in there to get my break even just slightly below 34 with selling some puts and stuff like that. Originally started selling some calls. I sold the 26 puts, rolled those to the 27 puts, and was looking to get some lower my overall basis. So now my break even is really closer to 33. 33 in that regard. I'm trying to get out of my November 27 puts in there that I originally sold for. Let me just double check this because I don't want to say this incorrectly. This is in eBay. I want to make sure I got my number right here on this one because I am maybe confusing it with another one. So I just want to make sure we are all clear here on this trade for eBay. And in eBay, I originally sold those, when I rolled those 26 puts up to the 27 puts, I collected another 38 cents. So all in all, I'm closer to $33 on my break even. I'm trying to buy those 27 puts that I sold for 38 cents back for 9 cents. I actually got hit on those right before we got in here. So that's filled. I have another working trade in here in Caterpillar. So I'm out of the eBay short puts, still long the eBay outright. But with Caterpillar, we played this on a bounce. High implied volatility after the earnings. I felt like we were going to get more of a follow through here with Caterpillar to the upside, which is what we are seeing. And we're getting that volatility to come out a little bit in there. And I did the December, sold the 100 puts in there for 76 cents. I'm trying to buy them back for right around 30 or 50% of max profit for 35 cents. So nice move to the upside, got the directionality right. A little bit of volatility coming out, so that worked out well. And able to get, or not able, I haven't gotten out of them yet, but I'm working to get out of those at 35 cents. So just slightly better than 50% of max profit. And that's about it for today. That's all I've done. Other than later on this afternoon, I'm going to be visiting Tiger Shark Trading, going to be talking about the importance of volatility and when and where we should be taking advantage of it. This is a great environment in and around volatility to be selling premium. So check that out at protraderstrategies.com. Sign up for the Tiger Shark Trading. If you followed me on Twitter, I put out that link yesterday, and I did it on LinkedIn as well. So you can also reach out to me on LinkedIn. All right. So if you can't take that, take it easy.